Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation this week with Scotiabank's chief economist, Warren Jestin. Warren, just before the break, you opened the door, thank you, for the discussion about real estate. You were in Vancouver to speak to a group of developers and other people in the real estate sector. The Mortgage Brokers of Canada released some numbers this past week, which suggests that, according to them, 3% of the Canadian population have plans to purchase a home of some description in the next 12 months. Your colleagues at the Royal Bank did a similar survey just 2 months ago. At that time, 10% of Canadians had some thoughts and plans about buying a home. That would suggest a rather dramatic decrease in Canadians' anticipation of playing in the real estate game. Why do you think that is?
Well, you can't compare two surveys. You got to ask exactly what was involved in the questioning. So it's a little hard to compare those two numbers directly. But I think the reality is we did have a bit of a pent-up demand for housing. Interest rates are at lifetime lows for mortgages. And so you're getting a lot of interest through the fall and over the winter to take advantage of prices before they went up and before interest rates went up. I think as we get closer to the rise in interest rates that's likely to occur over the summer, and with the federal government tightening up the way mortgage qualification occurs, using a 5-year mortgage rate as the hurdle rate, which they have just done, and of course as we get closer to the HST in BC and in Ontario, you may well find that there was a lot of pre-buying and a little bit of a lull. I wouldn't actually be surprised if, as we go through the second half of the year, we get a bit of a step back in not only the pace of house buying, but also prices coming down a little bit. And after the run we've had, a pause, I think, is a good thing. Do I think it's going to continue? Do I think there's some really bad news out there? Based on the employment growth that we're seeing, the growth that we're projecting, the immigration levels that drive a number of markets, I would say that you may be not into this rising price environment that we found ourselves into recently, but still very solid fundamental demand. Moreover, one of the biggest problems in housing right now is supply of new land and lots, and this occurs in many markets. So part of the run-up, part of the enthusiasm, part of the desire to get in early rather than later is a supply constraint mixed with lifetime opportunity at rates that you're unlikely to see again.
When we talked on radio a couple of months ago, you were comfortable in predicting a 5 to 10% downward correction nationally, at least, in housing prices. Are you still comfortable with that number?
I wouldn't be surprised if the setback from recent numbers, which of course we've even had them over the last day, showing further increases, seeing something on the order of 5%, maybe a little bit more. I don't think it's going to reach 10% or over. And again, that still leaves prices well off the low that we saw during the recession. The interesting thing about the Canadian market, of course, is it's held together very well. And it took a brief pause. I mean, you can remember in the lower mainland, the fall of 2008, where there was a big setback. I mean, you went from multiple bidding wars in that particular market to no bids at all and some discounting, but that didn't last that long. In the U.S., when you have a setback in the market, it lasts years and is likely to last a few years more.
Well, I want to pursue that for a second, because the United States right now is in year 5 of a decline in the housing market overall, residential, commercial, especially house prices. And I'm reliably informed that they have yet to find bottom. Are there lessons in what's going on just across the fence for us to take and guard against falling into that same pit?
Well, the U.S. housing market was driven to unrealistic highs by a type of lending practices that just don't exist on this side of the border. And the crash in the housing market has been a big factor destroying consumer confidence south of the border. It's one of the reasons they have a domestic recession that's deeply ingrained in the family. Here it was an export recession. Commodity prices went down dramatically. The auto industry selling into the U.S. Had a big problem. When you look forward into the U.S. market over the next couple of years, there's a good chance that with bankruptcy still rising and with unemployment being very, very slow to come down, in fact, we're nearly 10% on the unemployment rate there, that the recovery is going to be very slow and uneven. So you may see a further low in prices. You may see a further low in many of the markets. So if you're an investor, you don't necessarily have to chase the opportunities. They'll probably be chasing you for a while.
Do we have some subprime mortgages in Canada? Have we gone that route, which seemed to be a big part of the U.S. problem?
Yeah, there were some lenders that were taking on higher ratio or high risk types of mortgage, but it's a very small percentage of the total. And in fact, the one saving grace in Canada was that, first of all, insurance on higher risk mortgages was widely taken out, CMHC type of insurance, and banks did not sell the mortgages into big funds and distribute them out. In the U.S., one of the big parts of the problem was that many of the banks were offering an origination and sell type of business. So they would go out, they would get a family to take the mortgage, they would bundle it into a package and sell it to somebody else. So all of a sudden the risk wasn't there. And when you start taking the risk away from the mortgage business for the person that's doing the sale, then effectively you're really reducing the type of quality those mortgages may have.
And were Canadian banks simply not allowed to play on that ballpark?
Well, there's two issues. I mean, we've got regulation in Canada that's much tougher. We've got an insurance system that's, I think, much better. And we've got a banking system because it's much more concentrated. We don't have thousands of banks. We have, a few large banks that effectively decided, look, this is our customer relationship. This is one of the most important parts of our customer relationship. Why would we give this away? It's an originate and hold type of model, and that's worked very well in our system, and one of the reasons I think we got the strongest banking system in the world.
Our special guest this week is Scotiabank Chief Economist Warren Jestin. Lots more to come. Stay with us.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.